So hi guys, we're gonna start talking about CapEx, um, and also my journey as far as the two deals that I found. Well, three deals. Might have to let one go and try to focus on two of them, and the financing hurdles that myself and Dyani have been going through to get me in the game real quick. But yeah, so let's start off with CapEx. What do you think?
So when you say CapEx, can you elaborate a little bit more? Just so I know what path we're going down when we talk about it.
Yeah, I thought more about just maintenance, vacancies, and anything that ends up going wrong, as far as things breaking. Um, that's what I was thinking about, and having reserves set to the side, which I don't, right? So
Most people don't when they start out.
So that was like the big hurdle for me, and also creating some sort of plan, just in case anything does go sideways, which it most likely will. Who knows? But better to be safe than sorry. And
Absolutely.
it was amazing that you pointed that out because I was so focused on just getting the deal. I wasn't even really thinking about it until you brought it up. So I was like, oh man, thank God.
That's what I'm here for. I'm here to make sure you don't fall into those same holes that I did. So when I think about CapEx, every part of the rent every month should be going towards your reserves, whether it's vacancy, whether it's capital expenses like a water heater, a roof, like major repairs, or just plain old repairs and maintenance like a running toilet, a new toilet. That's not a capital expense, but it is a maintenance and repair. Maybe the tenant puts a hole in the wall that you need to fix, those little things. So, there are percentages that you should be taking out of your rent each month, and putting to the side until you've built up a comfortable reserve. Now, every investor is a little bit different. If you have a mortgage, some investors will put 6 months PITI away, which is your principal, your interest, your taxes, and your insurance,
Hmm.
and that'll be their reserves. Some people are a little bit more conservative. Some people run with no reserves. I have a friend who runs with 10 grand reserve, regardless of how many properties he has. It doesn't matter what's vacant, what's not. He just keeps 10 grand in an account, and that makes him, sleep soundly at night. So it depends on where you are. I'm definitely a firm believer in you should set a reserve number, whatever that number is, because I lie to you not, when you have a large amount of reserves, nothing breaks, or it'll be like the light switch plate cover. It'll be something that costs you like a quarter to fix. But when you have no money, that's when your water heater goes. That's when, the diverter on the tub goes and you realize like there's no access panel. All these things happen. So I do have a reserve number personally. And it depends on whether I have a mortgage on the property or whatnot. And then once I hit that reserve amount, what I do is I still continue to fund it, but I only fund that reserve account 25 to 50% of the original amount. And then everything else goes back into cash flow. So I definitely recommend having at least, like, if you're starting out, so in your circumstance, you're starting and you're the true definition of using OPM, other people's money. So I definitely recommend, when you get started, start putting your reserves away, take less in cash flow, because right now you're not getting any cash flow from these properties. So stick your cash flow for the first 6 to 12 months in your reserve account, because it's not like you need it. You're living on what you're living on now anyway.
Hmm.
And then after that year, you've built up a little bit of money, then you start taking your cash flow. You start to profit or pocket from the business.
Got it. Right, right. Yeah, I had the exact thing in mind. As like I take down a unit two or maybe even three, I wasn't going to touch any of the cash coming from it. Just building out a reserve, and also just to pay down the really high interest rate debt, as far as the down payment goes. So whether it's like credit card debt or whatever path I choose to go upon, I wanted to allocate most of the cash to pay that down. Um, you know, and also just create some kind of game plan as far as that goes as well. Um, But
So let me chime in really quick. When it comes to paying off the high interest debt, you want to be really strategic with that. And I don't want to encourage you to carry high interest debt, but you want to remember this is not consumer debt. So you don't want to approach it the same way as if you went shopping, on your credit cards. Then
mhm,
I would tell you, as much money as you have, throw it at that debt, get rid of it.
uh-huh,
But because this debt is going into your business, and I'm not a CPA, so make sure anybody out there listening to this, talk to your CPA. They will advise you what's right in your state, in your country, whatever is going on when your finances. But that credit card interest or the personal loan interest or however you're funding, whether it's private money, however you're funding your down payment or your deals, don't forget that this is a business. So that is all tax deductible.
mhm.
So as long as the property can float the payment and it's not hindering you from growing, you don't have to be in as much of a rush to pay it off.
Got it. Okay. And I know, as far as like the credit cards go, they have like the minimum payments. Um, but as far as like a personal loan, because we also went along that route, trying to maybe find me a personal loan for the down payment. Um, they have like 3 to 5 years, something like that for the personal loans, sometimes even shorter of a time period. So what do you think for that side as well? Just also make like minimal payments, things like that? Or is it going to just, automatically give you payments structured for the 5 year term?
So if you choose, it's going to structure your payments based on the term you choose in the very beginning. My rule of thumb is stretch it out for as long as possible,
Hmm.
because then if something happens and you have a major repair that you have to make, you're not as strapped with cash because your payments are smaller. And
Hmm.
what I would do if you have extra money until your reserves are built, let's say if you take a loan and the loan payment is $200 a month for 5 years and you can afford to pay four, don't pay that four because you haven't built your reserves yet. And once you pay it, you can't get it, you can't borrow it again. So
Hmm.
stick that extra money in your reserves at first. And once you have a little bit of wiggle room in your reserves, then you can start making the extra $200 payment to pay off that loan if you want to, or vice versa. But the key is when you run your numbers, make sure that loan payment works in the deal. And if it works in the deal, don't be in a rush to pay it off.
I see. Okay. Only if it doesn't work in the deal.
Correct.
Got
Because the thing is, you have to take into consideration opportunity cost.
it. Hmm.
So if you can pay $400 and pay off that loan in 2.5 years or 2 years instead of five. Okay, yes, at year three, you are going to cash flow that extra $400, which is really nice. But let's say in that 2 years, that extra $200 could have gotten you another loan, which would have gotten you another property.
Right.
Paying it off early cost you another property. So then you have to think, is it really worth it? Because that second property could have cash flowed you the same amount.
Hmm.
You know what I mean? So when it comes to consumer debt versus business debt, you really have to look at it on a case by case basis, but on a completely different mindset.
Understood. Okay. So as far as right now, as reserves go, I'm most likely going to be using maybe a private money lender, and I would pay, pretty decent returns. Interest rate for them anywhere between 8 to 10%. So
Okay.
it's still better than hard money, um,
Absolutely.
but I can negotiate, somewhere between like a 2 to 3 year term with them. Um, it would depend on who I go with for something longer, if it's someone older. But let's see exactly what I can do. If I can do private money for the first deal, that would be amazing. And if not, then most likely, something as far as like a personal loan, or maybe even just credit card. Just opening up a new credit card. That way I can have, 18 months of zero interest, something like that. So that's what I was thinking, but it will definitely, tank my credit score in the beginning, like you told me. Um, but yeah, I mean, what would you suggest as far as even having like a reserve? Because I have 10 grand set to the side. So I have that. And I don't want to use that as my down payment or anything like that, because exactly what you said, what if something goes wrong, anything breaks, vacancy, whatever, at least I have that 10 grand set to the side to go ahead and use it. You know what I mean? At any
Absolutely.
time. So that was the big thing for me, and I wanted to get your opinion on everything that I have going on in my head right now.
Okay. So, as I always say, I will never tell you, oh, this is what you should do or go do this. I will tell you what I would do,
Hmm.
in your case. If I were in your shoes, what I would do. And then you have to figure it out from there, basically. And I'll help guide you through whatever decision you make because everybody has a different risk tolerance.
Yeah.
So my general rule is I do not put the house where I lay my head on the line.
Right.
And that allows me to sleep comfortably at night because I know no matter what happens, where I lay my head is safe. So I can risk everything else because I always have a home to come back to. I have a home for my kids and my family.
Mhm.
Um, in your specific case, I would run the numbers on every option available because some of the hurdles we're running into right now is that you don't have an established track record in this industry. So it makes lenders nervous. People who would loan you money are like, well, I don't know if this guy can pay me back. Like, what if he doesn't know what he's doing? It's easy. I could talk about laying tile all day. Like, I can't lay no tile. It's not for me.
Now,
Um,
speaking of, um, everyone doesn't know like my situation right now, so let's just fill them in really quick. So first deal, I found I guess you could say a tired landlord. He's getting rid of all his properties. He's down to his last three, and he offered to sell me all of them for a package deal of 45,000 each. They're worth around 90 to 100,000, and I'm going through a really hard time getting qualified for any of them. And this is where we're at right now because of the low experience, well, no experience. Um, and yeah, I think that's about it. No experience. And also, yeah, I guess just that and just no experience really. And these properties are in a D-class neighborhood, which also makes lenders more nervous as well. So just those two things tied together is giving me a hard time getting qualified for anything, even though I do have good credit score. Um, but yeah, just not as long as a credit history as someone like, Dyani or anything like that, but just because of my age. Um, but yeah, so that's where we're at. And yeah, go ahead.
I think this is like, and I posted on my Instagram and I posted on my TikTok about this situation because I think this is something that influencers really don't talk about and a lot of people don't talk about. More people are concerned with the fact that they don't have money or they don't have a good credit score, and they tend to forget about just longevity in the industry or time in the industry, building a track record and building a reputation as somebody who can perform. And you're a perfect case study. Like, you have good credit. You know what I mean? You have a decent income and you're not carrying a whole lot of debt. You have a little bit of money set aside, more than most, because 10 grand is a lot more than a lot of people come to me with. And you're still having a rough time new in the industry. So there are a couple of things that you can do to combat this. Of course, you can JV the deal, so joint venture. You can partner on the deal, and JV and like an LLC partnership are just a little bit different because with an LLC partnership, you are forming a business together. Where a JV, you're saying, okay, this one deal we're gonna attack together, and then we could separate, we could part ways later and do whatever. But if you get into one of these deals with somebody who's got, some experience under their belt, that could open up a lot of doors for you. The other thing is you could get super creative. And you have to remember, when it comes to creative financing, there are a multitude of things. I think a lot of people will think seller financing, or they'll think subject to, or they think credit cards. But you have to remember, all these things can work in conjunction with each other. It's not one or the other. It could be, 5 grand on a credit card, 10 grand in a personal loan, 20 grand from your 401k. You know what I mean? And you just kind of piecemeal it all together. And I've done that. don't forget about friends and family who may have a little bit of extra money that they can invest in you. Sometimes they'll do it with no interest just to see you succeed, but you have to exhaust all these possibilities. And that is one thing that I do love about working with you. You will come to me and you'll say, Di, what do you think of this? Here's all the things I've already done, and here's where I'm stuck. And it gives me some, room to like really hit the ground running with you to help and see. And the key is, like I always tell you, it doesn't matter how many different places you pull the money from, as long as at the end of the day, it works in the deal.
I see.
And that's the key.
Okay.
So we're looking for 45 grand. And you know what? I'm an experienced investor, and I'm going through the same thing right now. I have 2 properties in the same area or general area as you. One is in like a C- neighborhood. The other one's, I'm gonna say D, upcoming to maybe a C, because they just built a new courthouse around there. But a lot of lenders don't want to lend in this area despite my experience. And I've got 23 units that I'm sitting on now as a landlord, 20 years experience, a decent credit score, and I got a little bit of reserves, and I'm still having a hard time because lenders don't always want to touch it. So I am, I'm facing the same things you are. And there are some things that are newer. There's some newer products out there I'm considering. But right now, I've just had my notebook out, and I'm going to tell you the same thing. Say, okay, I don't want to touch this 10, but if I had to, I have it. So you list that. You know what I mean? That is that is liquid that you can draw from. If you had to take a loan, what is the max you can get from the loan? What's the interest rate? What's the minimum payment? Okay, that's some numbers. Where else can I pull money from? How much can I make in the 30 to 45 days from the time I sign this contract to the time I have to close that I can pull from? And you list out every place that you could possibly pull money from. And then you see what's left. And then from there, you get creative and you say to yourself, okay, if I pull money from all these places, how do I put it back besides just the cash flow? So if it's just cash flow from the property, it's going to take me this long to put it back. Do the numbers still work? The answer is yes, move forward. The answer is no. It's either back to the drawing board on the property, or it's back to the drawing board on where you can pull the funding from. From there, I want to start to look at, and I want you to start to look at creative ways to get out of it. So once you've pulled all these funds from all these random places, now you have a property that you own. So from there, you want to call up your lenders and you want to say to them, hey, I know you said my experience is a problem in this neighborhood. If I already own this property, can you refi me out? What are the terms and conditions? Because once you have it, once you've acquired it, now you own it. So you're starting to establish a little bit of a track record. How long do I have to have this property under my name before you can refi me out? What obstacles do you think I'm going to face trying to get out of this money? Because at that point, you can make an informed decision and asking them, what loan products do you have that are going to fit my need when I'm ready to get out of this in 6 to 12 months? Because let's say, like right now, you're having trouble funding this deal. But let's say if you had owned it already, you would have no issues because you've owned it and you've been able to show a track record on it. You've had no vacancy, you've collected your rent, you've done all that, and you can go to the lender and say, hey, here's my track record on this property. How long does it need to be before you will lend on this and allow me to do a cash out refi?
Okay. What do you know what they generally require? Like how long of ownership? Or because I know you bought your first property when you were like 19, right? So
Yeah.
it's like a long time ago.
So some of those, my older ones, I haven't gotten out of. I believe the industry standard right now is 6 months. But I have been hearing there's a new law being passed that properties have to be seasoned for 12. So I would talk directly to lenders because they're going to know what's going on the best in their industry. And my rule of thumb is I stay in my lane. I stay in the lane that I am the most comfortable in, that I'm the most knowledgeable in, and then I call. So if I have a question about my taxes, I don't start Googling and looking stuff up where I can misunderstand. I call my CPA and I say, My CPA's name is Holly. I say, Holly, I just saw this. Is this right? What am I missing? What's going on? And it's her job as part of my team to figure it out for me. So I would call my lender and say, hey, this is what I'm looking to do. What do you think? Get their feedback and say, okay, I've heard this is going on in the industry, that it might change the seasoning period from 6 to 12 months. You know, what can I do to combat that? What options will I have? And then I would prepare for worst case scenario. So even if they tell me right now it's 6 months, in 6 months, you don't know what's going to be going on. So I would prepare for 12, because you know that's worst case scenario. That it's going to take you 12 months to get out of it.
Okay. No, yeah, 12 months is it's definitely doable, because all these, even like I could put maybe like half of a down payment, or even like half of the 45 grand or close to it on even just a credit card, have another on a personal loan for a year or 2 years, and even just do private money lending for even a small majority of that.
Mm-hmm.
But now it gives me some time. Yeah, you definitely just opened up my view on everything as far as like getting out of this, because that was like something that was also like bothering me a lot, not knowing how I was going to get out of it and how much time I really have in order to get like fixed rate long-term debt. So if I can just like hold it off for like 6 months to a year, that's great. And I feel like this is a perfect beginning, because even Gene, I took a ride with him all around Salem, and he was telling me like, hey, this is the bad part, this is the good part. I've owned properties here, 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 and like he was just showing me a whole bunch of, you know, all his experience and history in the area. And
Mm-hmm.
he told me, well, look, I am now buying a property in South Carolina cash. And he said that this is my third property I'm going to own cash. And he was like, I came a long way. And he used to be homeless, and he told me his whole story. And
Wow.
so he's like, look, listen, kid, you got to start somewhere. And, properties around you, if you can't get into them, then here is like the only option. Then go for it, because you got to start somewhere, and you will get to where you want to go, if you just keep going, regardless the hurdles. And it was the same kind of thing that you basically said as well. So, yeah, it gave me a lot of hope. So yeah, definitely. And I think that there's no wrong way to go at this, because it's only 45 grand, right? So even if I'm not cash flowing with these high interest rates for this 6 to 12 month period, that's okay. I can just struggle it off. Because it's kind of like a car payment or something like that. I might have to come out of pocket for 6, 12 months, and then I'll be cash flowing as soon as I get the long-term debt, that I did calculate. Um, so, so yeah, I think that could work out.
Yeah. And then you also have to remember, like, you want to count on being able to get out of this short-term funding with this property. But the trajectory that I see you going, you'll have another property before you hit your 6 to 12 months. And
Mhm.
that might be in a better location. Plus, you're already starting to establish your track record. So you may be able to refi the second or third property you get to pay off the first one, because the second one has better funding.
I see.
You know what I mean? So I'm not saying count on something you don't have,
Mhm.
because like we talked about before, a bird in the hand is better than two in the bush.
Yes.
But you do have other options later down the line that will come up for you or appear as you're ready to process them.
Hmm. Got
Because even for me right now, a lot of the money I'm taking to fund new deals is money from old deals. So I'm refinancing out of old ones, paying back whatever bad terms I had for more favorable ones, and using the extra to buy something new.
I see. Gotcha. And for everyone that knows, I mean, well, everyone that doesn't know, this property that we're talking about, it's kind of 45, 50 cents on the dollar, because ARV is somewhere around 90 to $100,000. And the purchase price is at 45 grand. So as I get the rents a little bit higher, and I also get an appraiser to go in there, it's definitely going to appraise for much more than I'm buying it for. So I'm building in just equity, just entering the deal alone. So that's also another thing, and it'll most likely allow me to get into many more other opportunities as well, even if it's in the same town or even a different town. Um, this property can definitely just, you know, boost my journey a little bit. So
Absolutely.
yeah, that's a real reason why I don't want to let go of this opportunity either. Because a ton of the properties that are on market, they're already at like 100 grand in the same location, you know. So I definitely think I want to definitely take advantage of this and not take too much time making decisions and trying to figure things out. So this is awesome having you. I really appreciate it.
No, I appreciate the whole relationship we're building. I think I definitely see us doing more things in the future, and I'm excited for it. I think it's going to be great long term for both of us. And I'm excited to help you. Like I told you before, your energy and just the go-getter mentality that you have, I think is incredible.
Thank you. I really appreciate it. But yeah, other than that, I think that's it for right now. I need to call some more lenders. I need to figure this out. And then also might have a private money lender in mind. Um, and I also met the owner of like a club on Route 36, and he told me that so he has a ton of capital and he invests his capital into CDs. So I was like, what if I could get you a better return into the double digits instead of your 6% that you're earning right now? And it's backed by my real estate. And he said, that's an option. Let's go have some dinner and discuss this more. So that can
That's
be
great.
yeah, that can be a huge future opportunity. Um, so let's see how that turns out as well. But in the now, um, I'm just going to, also open up a credit card, yeah, like a business credit card, and see how much I get approved for, and also just use that as some of it. And then I'm also like applying for a bunch of personal loans, just trying to see like what kind of limits I can get, and then just see exactly what these lenders that I've been talking to for the past few days, what they get back in touch with me with on taking this down and if they have any options. So yeah.
So one last thing before I let you go, and this is a piece from me to you. Do you know anybody that has been in like the military? Anybody close to you?
No, no, that's a struggle right now. I do not know.
Okay, because I want to say if you can find somebody who can refer you into Navy Federal, it doesn't
Hmm.
even have to be somebody close to you, but if they were ever in the armed forces, they can refer you in. And then Navy Federal, what I love about them as a bank is they score their members differently than just their normal credit score. Like you get a score with them based on your history with them as a member to their credit union. And what I've seen is a lot of people will get a credit card with like a 25 grand limit on their first go round.
Wow, wow.
So if you can find a way to get into Navy Federal, that's huge.
Hmm. Got it. Um, and I thought that you needed to be like, family or even living with the person. Is that the
Mm,
case or not really?
no,
Wow.
I've seen too many people get in, and I know like they're not in the same house with anybody.
So just from a referral, huh?
Yeah.
Wow, okay. Yeah, I'll definitely look at my options. I do have a buddy of mine that is in the military. I haven't spoken to him for like a year. Um, so let's see how that goes. Um, yeah, I'll definitely give that a shot. Won't count on
Absolutely.
it, but that's definitely an option too.
Yeah. I mean,
You
if
do
they give you
personal
a credit limit of 25, 30 grand, I mean, I'm not telling you to max out, but their rates are usually pretty good on their credit cards. They're definitely higher than long term funding, but even 13, 14% is not terrible.
that's awesome.
Yeah.
Okay. Yeah, I'll definitely look into that. And I'm sure they
And
probably
keep in
have.
mind, I'm sorry to cut you off. Keep in mind when you open the additional credit cards, your credit score will take a little bit of a hit, but it'll jump because as you start to use them, you'll have more available credit, and the more available credit you have, the lower the percentage of usage will be. And the higher your percent of usage is what makes your credit score go down really fast.
I see. Yeah, no, 100%. Um, I feel like right now my usage is like 1%. So
And that's why your credit score is so good.
so I feel like whenever I, use any of it for this, like it's gonna tank regardless. Um, so it is okay, but I want to transition this funding for business credit. That way my personal credit doesn't get affected as much. Like I'll use it as a guarantor, like I'll co-sign for it.
Mhm.
So hopefully I can get like a decent amount. That's what I'm wishing for, but let's see how it goes. Um, so yeah, that was like the game plan instead of just using it on my personal credit. Um, because I do have credit lines that I can just use to go ahead and take this entire thing down, just from my credit cards. But I know it's going to tank my score, and then when I have to get out of this, it's going to be another
A little
nightmare.
hard.
Yeah.
Yeah.
So, and also I've heard like hard money they don't really care about your credit score too much as long as the deal is really good and you have a track record, right? So, but then the track record comes into play. Um, so yeah, as of right now, I'm just going to speak to the different lenders that I've spoken to, and then see exactly what I can come up with. But I have to get this deal down by under contract at least by the end of the week, before it also gets taken up by the other investors that have been buying up everything else.
And then don't be afraid to put it under contract, because you do have a backup plan. Worst case scenario. So let me ask you that. Worst case scenario, are you willing to put this deal on your credit cards?
Yeah, screw it. I
Then
am.
lock it up and put it under contract with a 45-day close.
Hmm. Okay. And it has to go through probate anyway, so it's contingent upon probate.
There
So
you go.
it'll give me like a month at least.
Yeah. So put it under contract. That way he can't sell it to anybody else. And then continue to work on your funding.
Understood. Okay. And then also the other property is 14. So did you take a look at like all three that I broke down and I shared the notes with you?
I did. I
Uh,
did.
okay, so the one that is 14th, no, 14 17th Street, that one, he said that the tenants are relatively good and they would let him in if he was there. So that is not an issue. But
Okay.
we didn't give them a notice, and that's the property that we went to go take a look at, and they
Mm-hmm.
didn't open the door because he didn't give them a notice. So he said that they might have been sleeping or at work. Um,
Not only that, but I wouldn't let my landlord in if you didn't give me notice.
yeah, yeah, yeah.
And I think I'd be a pretty good tenant, but this is still my house, my personal space, my kids.
Hmm.
You know what I mean? It's kind of like an invasion of privacy. Plus, you're coming in with a guest that I don't know, and
Hmm.
I'm not prepared to receive that guest.
That's true.
Yeah, a lot of people are like that.
No, no, and I get it. I would be the same way. Um, I found the entire thing to be so like fascinating because I live in an apartment and no one really comes to buy them. You know what I mean? So no, I never really see anyone other than the maintenance guy come by to fix something. So yeah,
Mm.
I hear you on that. But yeah, that one is also an option, and he said that he would also be willing to give me that one for 45 as well, even though there's the investors that offered him 53, but they haven't moved on anything. So he's like, they told me 53 and just haven't been hearing back from them. So they kind of just left me hanging. So if you want it and if you want to take it right now, we could work out the same deal for the other one on this one as well. Um, but then again, like, I would be buying that one as well without taking a look at it. So, but he said
Is
that
that one? Go ahead. I'm sorry.
I was going to say that the tenants aren't bad in this one. He said that they cooperate and they would let you come in just with giving them a notice and having me there. But without having me there, you might have a little bit of a hard time because they know me and they trust me. So
Absolutely. So what I would say is this one a Section 8 tenant as well?
no, no.
And how long have they been there?
So they've been there since he's bought it. I think since 2016.
Okay, so I would definitely ask for like a rent roll,
Uh-huh.
and a lease ledger. So the difference between a rent roll and a lease ledger is rent roll is what the tenant should be paying. The
Mm-hmm.
lease ledger is what they actually pay. So it'll show you if they're behind, how many times they've been late, all that stuff, and you can see that for yourself.
Mm-hmm.
Be prepared. A lot of small landlords keep horrible books.
He has terrible books.
Yes. So I'll definitely work with you on your books to make sure you're not in this situation.
Mm-hmm.
But some people do it on purpose. It's not, to me, a great strategy
Mm-hmm.
for this reason. When you're ready to sell or when you want the maximum value in your property, you're not going to get it because your books are a mess.
Mm-hmm. And he said
And
that
then honestly,
cash app him.
he
So
should still have a ledger regardless of how they pay.
gotcha.
Um, and be able to tell you like how many times in the last 12 months, 24 months they've been late or haven't paid or whatever. But if they've been there this long, they probably made that house a home and they don't want to leave. So
Yeah.
I would ask, can you give them notice that I'd like to come look and see what they say? Because he's not from around here. So the odds of him being here while, you need to get in are slim to none. But continue to work on financing. I sent you that last lender. Definitely reach out. I have one more. He funded a deal for me a long time ago, but the deal was only like 40 grand. So it was a few years ago. I don't know if they're still open to it and it's more conventional, but I'll definitely send you the number and we can see.
That'd be awesome. Okay.
Yep. The key is like somebody is going to say yes.
Mm-hmm.
It's just, do you have the patience and the tenacity to continue to call until you get that yes? And like I told you before, I was in a rough spot for a long time with my first bird. And I think we called over 28 lenders
Wow.
before I got a yes.
Wow. No, that is awesome.
So, yeah, like if you have the wherewithal to get it done, you can get it done. It's just most people give up or stop trying before they get there.
Yeah. Yeah. And I definitely think that since like I cold call and I wholesale, that's awesome because like I've been in the sales like industry for a while and I'm used to hearing no's. So I think
Yeah.
that's it's really a good thing. And yeah, I'm not discouraged at all by any means. Um, just because I know that it is a good deal, I don't want to let it go at all, especially not to the Jewish guys that are just buying everything up left and right. So I don't want them to get another one. So
Yes.
all right. So yeah, I have everything in line now. Um, yeah. So let's see exactly how everything turns out. I want to just reach out to him and put this under contract before anything else, at least the 87. Because that's the only one that cash flows out of all three of them, like from day one.
Yeah.
So yeah, put that one up and tell him like I'm good to go for that. And then ask him about 14 and tell him like, hey, would I be able to get in that one with a notice? And also ask him for some sort of a rent roll because I did ask him on a ride, and he said that for 87 he would be able to provide me rent roll just because it's coming through.
Paid through direct deposit. Yep.
Yeah, and so he said that yeah he has everything for that one, but the other ones he's like iffy on. And he was just like hesitating on even telling me anything as far as like rent roll and things like that goes because I don't think he has anything filed at all. Like he has no records whatsoever. And
Mm-hmm.
he said that was one of his like biggest mistakes is not having someone help him. And everything just became a mess.
Yeah. And it's very hard. Like it is super easy to fall out of a consistent rhythm and get behind. And once you're behind, it's a nightmare to get caught up. I've been there.
Yeah, and he has no systems in place. So that was like another thing that I noticed. which caused him to just burn out. You know what I mean?
Absolutely.
So because he went all the way to 64 properties without systems in place, and he was just trying to do this all himself, from like
Mm.
books to maintenance, and he wasn't even hiring out guys to do maintenance. He was doing it himself.
Oh no. And I mean, if you can, it's a great way to get started, but it's not sustainable.
Mhm.
Like you look at any other business in the world and nobody, you don't see Ronald McDonald flipping burgers. Like it's not sustainable.
Right, right. So yeah, I've learned so much from him. Even just like going on the ride with him, it's just talking to him about everything. And he knows like almost everyone in town. While he was riding around, he was just like, hey, like it was crazy.
Absolutely.
But awesome, yeah. So by next time we get on here, I should have this 87 under contract. Um,
Nice.
but for 87, is there anything else you'd have in contingencies? I'm having it contingent to probate, since I'm not going to buy it unless it's finished. Um, and honestly, that's it. There was also, I put a contingency for liens and encumbrances, and on the title. Um, but anything else that you can think of?
So I would say the property has to be insurable.
Hmm.
The property has to come with a clean and clear title.
Yes.
And then just in case, I would stick in a financing contingency just in case you want to be able to get yourself out.
Got it. Okay. Sounds good. Awesome. I think I have everything in row now.
All right. And if I think of anything else, of course, I'll text you because I text people like I'm a stalker.
No, I appreciate it. Thank you so much. I can't like, express that enough. Like, thank you so much for everything.
Of
Um,
course.
finally getting me started and rolling. So this is
No,
awesome. Oh,
no,
and
I'm so glad. Wait, go ahead.
sorry to cut you off, but before I forget, so I was stuck in, choosing what to do. I was just going crazy all day, thinking about, after I got home from meeting Gene, the owner, I was just going crazy. Like, what am I gonna do? Calling all these lenders. I'm not getting any kind of yes from anyone. So I'm like, just going crazy thinking about everything. And, I've had my buddy Nick, who was like my first mentor. He always would just go like crazy stressing out when he has too many deals on the plate, and then he would just like ghost everyone and be like, I'm gonna be away for like 10-15 minutes, I'll be back. And what he would do is literally jot down everything and then just create all his problems and solutions, and then he would just come back, out of nowhere. He's like, okay, I got everything figured out. And you walked me through the same thing, right? So basically you were like, okay, so jot down all your your problems and all of your solutions, like the risk to reward, and then does your risks weigh the rewards? So I really appreciate that. You basically helped me like clarify everything, um and then just come to us, like a solution at the end. That was amazing. And I went from stressing out to like, okay, we're good. I need to move on this. And one thing that you said, um, now you're moving forward. I was just stuck sitting there stressing out for hours, and then now, I already have some plan and guidance to like go take another step. So that was amazing.
Absolutely. I'm glad. I'm so glad. So I'm a firm believer in what's meant for you will be for you. But I think some people take it to the extreme and they think if it's not easy or doesn't come to them easy, it's not meant for you. And I don't believe that. So I also believe like you can't pray to catch the bus and be like, oh, please let me catch this bus. Please let me catch this bus. Don't let me be late. I gotta catch the bus. And then like you're strolling down the street like you're going to a picnic on a Sunday afternoon. No, you still have to run to catch the bus. And if you're running to catch the bus or you're working hard calling all these lenders and the deal falls through, then that deal wasn't meant for you, but you did everything you could. So then you can say to yourself, you know what? Here are the lessons I learned. Here's what I'll do differently next time. But this one, it was blocked from my path for a reason.
Mm-hmm.
And that's how I look at everything. I'm going to do whatever I can. I'm going to go at it as hard as I can. And I know that it was meant for me because I worked to get it. And if I didn't, then it wasn't meant for me. But then all this work has set me up to get the one that is. And if you're stressed out, there's two things to look at. You make your list, your pros, your cons. And if your reward outweighs your risk, go for it. And then think to yourself, if I'm wrong and I just hit every con and no pro, what's the worst that can happen?
Right. Exactly.
What's the worst that can happen?
And also, you always told me, think about your situation right now. Can it get worse? Like, or are you already in the worst situation right now? You know? Um, so yeah, it's like, I got nothing to lose. Like, how many properties do I have? 0. So it's like, what am I going to lose if anything goes wrong? No
Right.
property.
Exactly. And that's like, when you look at it like that, and even after you have 4 or 5 or 6 or 20, you look at it and you're like, wait, I built 20. I built 4. I built 5. I built 1. I built 2. I could do it again. Because I swear to you, it will be as frustrating on deal 20 as it is on deal 1. You'll be just as frustrated. But it will get easier and less scary, and you'll be less apprehensive with every step because you will have done it. Or you'll start to trust in yourself more. And that's the key. Like, it's not that I say, I don't trust my tenants to pay. I don't trust things not to break in the property. I trust in my ability and my willingness to work hard that makes my business work.
Right.
So what am I really risking? I know myself. So I'm not trusting in just the other things. I'm trusting in me.
Mm-hmm.
And if you can do that, like, you be honest with yourself, and you'll know whether or not you should move forward. And me just knowing you in this short period of time, I know enough about you. Even if the property doesn't cash flow, even if the tenants are bad, I know that you'll be okay. And I'm going to help guide you and make sure you don't over leverage yourself.
Mm-hmm.
But I know that you'll be okay. I know that you'll run a new campaign, close more wholesales, get a second job. I know that you'll do what you have to do to get you to the other side, because the troubled water is only a short distance. Mm-hmm. Always. Whatever it is fixable, and it's fixable in a short amount of time with real estate. And I know that you'll do whatever it takes to get yourself over that hump. So you'll be fine.
Awesome. Awesome. Yeah, there's no ifs, ands, or buts about it. And I wanna, do anything it takes. So I don't care at this point, So yeah, that's like the one thing. And I can't stress it enough about always thinking about, hey, what do I have to lose? What do I have to lose? So that's like something that's like ingrained in my brain from you. So awesome. And okay, so let's see how this goes. And then the next one we record is going to be the next step, and then so on and so forth.
All right, so just text me after you reach out to those lenders. Let me know what they say, and I will dig through my Rolodex and see who else I have up my sleeve that might be able to help us out.
Awesome. Thank you, Dyani.
You're welcome. I will see you later.
See ya.